Welcome to the Sangani Show, where we will talk about everything health, wealth, and wisdom. I came to the US in 1983 from Mumbai, India with $10.45 in my pocket and with a big dream in my heart. Now, I'm a practicing cardiologist, a businessman, an entrepreneur, life mentor, and most importantly, a dad. I have lost some, I won some. But every time I lost or won, I learned even more. And my success has not been easy, but finally I made it. And my next mission is to help you do the same. Learn from my experiences, and that is life is a business.
Hello, and welcome to the Sangani Show. And my name is, well, you guessed it, Dr. Bharat Sangani, and I'm your host. I'm very excited that this is our second season starting. The first season, at least from my perspective, was a great season. You are the ones who need to decide. And I guess partly it seems like it is successful because we are again here today for the second season. Today we are going to be talking on a very interesting topic. And it specifically concerns me a whole lot because where I come from. As most of you may know that I'm a cardiologist by my basic profession and then went into the investment side. So I've been greatly fortunate enough that people have put their life in my hand when I operate on them, put stents in their heart. And on the second side, people have put their last dollar in Encore Enterprise or any product that I have made investments in. And these are two very distinct pleasures and responsibilities I have had in my life. The two most important possessions of people's lives consider life and wealth. And that made me fortunate enough to entrust me with those responsibilities. So it really makes sense that today we talk about investments and what are the responsibilities that comes with the investment. And Micah came up with a great suggestion for our topic today, take my money. Well, we are not going to take anybody's money, and we are not going to feel like we have no responsibility towards it. Whenever you take other people's money, comes with significant amount of responsibilities with it. So today, to discuss Take My Money segment discussion, I have a very special guest whom I had a pleasure of knowing her for many years, and her name is Asia Erickson. She started and joined 12 years ago about asset management and investment portfolios. And then today she's responsible for the development and execution of the Ignite's strategic initiative. As you know, Ignite Investment is an affiliate or part of Encore Enterprises. Asia curates and manages investor deal flow, cultivates and maintains investor relationships, advocates alignment of interest between Ignite's sponsors and investors, and directs equity distribution for the firm. It's a lot of stuff that she does, and that's why I had to look at my notes. Basically, Asia is the one who really gets 100% integrated and associated with Ignite Investments. And anytime anybody who is invested in our company has any questions, they definitely reach out to Asia, and she normally takes care of their questions very efficiently and promptly. So come meet with me, Asia here. Because of the rules and regulations where she represents and I represent multiple government bodies, we have to have a disclosure that this information that being discussed today is for informational purpose only, and there is no offer to sell or solicitate any offer to buy any securities. Right, Asia?
That's exactly right.
Well, welcome to the show.
Thank you so much.
Tell us a little bit about your experience so people know more about you than the few sentences I mentioned.
Sure, of course. So as Dr. Sangani mentioned, and first of all, thank you so much for having me this morning. It's such a pleasure. This is financial literacy and education is something I'm very passionate about. So I'm always glad to have a discussion, whether it's with a first-time investor or somebody who has a long experience of investing. But as Dr. Sangani mentioned, I'm Azure Erickson. I'm head of Ignite Investments. Ignite raises equity primarily for Encore's commercial real estate projects. I joined Ignite in about 2019, so it's been a few years now, as Dr. Sangani mentioned. Prior to that, I was in Kansas City for about 10 years, working for a family office up there, an asset management firm on the public equity side of the business.
Cool. So you have public equity experience, and now with Encore Enterprises, you have similar to private equity investment
That's right.
experience. Well, so we got a expert who both sides of the investments.
That's generous. Thank you.
Well, we are very fortunate to have you. But let us start with the most fundamental question that all of us have is who should be investing? And as you can tell, our audience is broad. Our audience is, there are first-time investors, there are mature investors, and there are seasoned investors. So give us your thoughts about it. Who should be thinking about investing?
Well, generally speaking, I think everyone should be thinking about saving and investing. And how you save or where you invest, that certainly varies by audience and what your timelines look like, but there is an investment option for just about everyone.
So wisely mentioned. And again, it is unbelievable how important it is to save every penny that you can. And my dad used to say, save every penny for a rainy day. And so that goes without saving, and anybody can save. I mean, it truly, people have a very different thought process that I will only save or I'll only invest when I have a lot of money.
Right.
But that's truly not the case, because all of us should be thinking about investing at the first round of money that we get paid.
Absolutely. And I think for anyone in your Texas audience knows those rainy days, you never know when they're coming. So starting early and being consistent, I think, is
that's very true. Like the weather in Texas, people say if you don't like the weather right now, wait for a few hours and it will change. Very similar with investments too. You really need to keep thinking about the future and protect yourself for the future. None of us will be able to keep working forever. So we need to have some style or some management for our future. So now that we have gotten that out of the way, so everybody who's listening to this show, if you have not started investing, please start thinking about investments. And let us see what she has to mention and tell us. So tell us, start from the beginning. If I'm a beginner,
sure,
and I've never invested before, what investment should I look for? What are the guidelines for me?
I think the biggest piece of advice I can give to new investors is to keep it simple. Don't overcomplicate your life or get overwhelmed at the thought of investing. Whether it's $25 a week or $100 a month, however, pick a number and make it simple for yourself. Invest consistently over time, and that will add up to something more meaningful.
So there are concepts of dollar cost averaging, and there are concepts of fixed dollar amount investments. And those concepts, I truly love it, because I think it brings discipline. So it doesn't matter if it is $5, $10, 10 million, 100 million. And as you know, we have ability to invest all of those numbers. And it's very, very important that you start investing. And there are multiple vehicles nowadays that even for $5, they're called DRIP method, where we can still buy stocks, etc., if you decide to do that. And we'll talk more about, I'm sure Asia is going to give us some thoughts about if you do want to go into stock market, what is the right way to investing in it. Now let's give us some thoughts about people who have some experience and they are somewhat seasoned. What mistakes do they normally make, or what mistakes they should not make, or what direction they should be going?
Sure. So I'll separate this or bifurcate into the public markets and then private markets, which is where Ignite lives daily. But on the public equity side, I think people who start to build that confidence, then try to go too far and maybe try to time the market or outperform the market. And generally speaking, we don't need to outperform the market. If you dollar cost average and you're consistent, pick, an index, low cost index fund and be consistent with that. Don't try to get too cute. So for those investors that have done well over time, let's keep doing what worked. And then I think diversification is always the conversation here. And even on the private market side, we'll have people who come to us and one deal sounds really good. So they make one big investment and then ignore the next 4 that come after that. And that just increases your level of risk or exposure to deal-specific risk. So I think whether it's public markets or private markets, diversification is always part of the conversation.
You could not have made that statement more effectively than you just made. Diversification is very, very important. And that's why even at Ignite, we always suggest invest in every single deal Ignite produces. Put smaller amount or divide your dollars into all the deals because that gives you more protection. Nobody knows the future. If anybody says, I know it all, he's either lying or he doesn't know what he's talking about. So, and we all know that. And we are no exceptions. We are just using our experience to provide better returns. And I think a lot of our success is because we have used our experience to become a wiser individual, although I always find reasons to prove myself how bad decisions I make. But I always have said that the number of good decisions and the number of bad decisions, as long as the good decisions outweigh the bad ones, we usually work out well. And the only way to fight that is to invest in every single deal that comes through. So diversification is probably most important part. Regular investment is probably second most important part. As long as you have every single dollar that's available regularly goes into investments, that's a great way to do it. I forgot the name of the app, but there is an app out there too. And if you have any questions, I'm sure Micah is going to put our contact information on the screen soon. So reach out to us. I'll find the app and let you know. But what it does, every time you spend money on credit card, and it rounds off the dollars. So let's say you spend $5.40 to buy. You don't get burger anymore for $5.40, but if in case you got it at $5.40, and it will take 60 cents, it'll round it up to $6. It takes 60 cents and it goes to the investments.
I think my husband used that in his early 20s to get started, to get going there. And maybe it was a challenge when we closed the account. Some account fees, always watch for account fees.
Yes,
but
those things must watch.
it might be worth mentioning when we were talking to diversification on the private markets, how it works in real estate. But I think people think, how can I diversify my own portfolio on the public market side? And you don't have to be a stock picker to do that. When you can get diversification from these index ETFs and even more specific exposure on whether you like technology or you just want the whole S&P 500, whatever that may be. So you don't have to be a stock picker or an expert on reading financials to still achieve diversification in your public equity portfolio.
Very true. I mean, again, the investment world is constantly being challenged, and newer products are available. But as long as you do not forget the basic concepts you just mentioned about diversification, as long as you do not forget the basic concept of investing regularly, products are out there. And then we are available for all of you. If you have any questions that hasn't been answered or you want more clarity to it, please reach out to us. There is no fees or charge to it. I'm here to share my experiences with you. Asia is here to share our experiences with you, and we'll always be there to guide whatever little we know. So tell us about this. This is the question I always find very interesting, and I have some views about it, but I'll let you first address it. So there's a question here. If it says, I'm 41, is this the right time to start investing? Is it too late to invest? What are your thoughts about it? Let's say I missed my entire decade or certain decades. What do you think about those people?
41 is young. That's the new 25, right? So it's absolutely not too late to start investing. You have good, 25 years now till you can even retire? That's a good time horizon. Absolutely start investing.
No, that's very true. Especially as I get older and older, 41 looks really attractive. At one time, 41 used to be old for me, but you're absolutely correct. Any age is not an issue. The one caveat, though, I always mention, and I think people who have lost money starting at a later age is one of the main reason is that they're trying to catch up.
Right.
They wake up one morning and they think, oh my God, I haven't made any savings. I do not have a nest egg that I can use when I grow older. And look, my brother Joe or my friend Larry, and they all have made so much money. I need to catch up. So then they go into riskier investments.
Yes.
That really is a bad thought process. Remember one thing, investment, you can control the dollars, you cannot control the time. Do not try to mend the market to your timing. You mend yourself to the market. And if you mend yourself to the market, you will generally be successful. Do not fight the tide. There are very few people. There are exceptions always. There are geniuses all around. And I'm not certainly one of those. But trying to fight the tide puts a lot of efforts.
That's right.
You may reach the bank, but it will come with a lot of exhaustion.
It's not worth the risk.
It's absolutely not worth the risk. So what is an accredited investor and how does it distinguish and what are the options for accredited and non-accredited investors?
Sure. So there's a lot of options out there now, a lot of different product structures. Ignite primarily works with Reg D, which is for accredited investors specifically. So that's net worth of $1 million, excluding your residence, or annual income of $200,000 for the past 2 years is what the SEC defines as an accredited investor. And so those are the rules that we live and breathe by daily. But when you're moving into the accredited investor space, you certainly do open up your options into private equity, private real estate, and the private markets more broadly. But we at Ignite are also working on more ways to democratize this space so that non-accredited investors can still gain access to private markets.
Very true. And the reason accredited and non-accredited differentiation is there because SEC believes that if you are accredited, you have a little more sophistication than non-accredited investors, and you will probably make wiser decision and not throw away your money or get lured into some kind of scheme that can be dangerous to your investments.
They view the private markets, the SEC, as being more risky because there's less liquidity. That's probably the main thing, and less disclosure guidelines. But at least if you're losing, if you can make the $100,000 investment, then their assumption is if you lose that $100,000, it's less meaningful than your non-accredited investors who might be making those $100 a month and losing $5,000 would be extremely meaningful to their overall portfolio.
Very true, very true. So be careful of your status, and then based on that, you need to make a decision where you'll be allowed to invest or not to invest. Now, tell a little bit about, I heard that Ignite Investment was working on accommodating the non-accredited investors with some new scheme that is around for a while.
I would never use the word scheme with anything we are doing.
That's very true. The scheme can be used differently and then can have a negative connotation to it. So that's a very good point you made. But tell us what program you guys are thinking for non-accredited investors.
Sure. So I'm sure everyone's aware of the rise of crowdfunding over the last few years. And as a part of that, there's something called Regulation A, so Reg A product structure. And that potentially allows us to repackage private real estate or other private market investments in a way that allows access for unaccredited investors at lower price points. So instead of a $100,000 minimum, it's a $100 minimum or a $5,000 minimum, whatever we deem appropriate for the given asset.
True. So what she just mentioned about is called Reg A Plus, and this is the area where you do not need to be accredited to invest, but you can pretty much get very similar exposure to the investments that the accredited investors get at Ignite. So Asia has been working on it. The entire team is working on finding the right product, the right way to present to all of you. So people who have missed out with us in the past, for the several decades we've been doing this business, we are very excited to be able to hopefully offer this kind of product to the mass audience in the future. There are lots of other Reg A Plus investments that are out there. Just need to be careful which one you choose. And again, be very cognizant about it, be very careful, understand the sponsor, and that's probably the most important part. So that brings me to another question, Asia, is so what should an investor be careful about the sponsor, and how do they pick a sponsor?
Sure. So, I mean, track record is always what comes to mind, but I think especially when you're speaking about non-accredited investors going Reg A plus to try to gain exposure to asset classes they wouldn't otherwise have access to, understanding the sponsor and the product. Real estate has not, which is what we do, of course, has not been one of the top products put into the Reg A plus marketplace or crowdfunding markets, which is why we want to move into that space. But there's a lot of marketing dollars from other sponsors that glamorize products to get people's attention. And I think consumers or investors need to be so careful with who that is and what their history of raising money has looked like and delivered to those investors. You want longevity out of a sponsor and somebody who isn't just showing up to sell something shiny to you and not feel personally responsible for the outcome of that investment.
It is so important to understand the sponsor. My classic story has been, and trust me, I have nothing against guys or truck or a fax machine, but the story of two guys with a truck and a fax machine starting an investment vehicle, you need to be very careful. Careful. I was one of those guys when I first started, but by God's grace, all of those things have helped and accumulated. So we have a significant size company today with few thousand employees to protect your investment that you make in our firm. So be very, very careful. If somebody who doesn't feel like a true investment company, then you want to dig more into it. Doesn't mean people who don't have a big investment company are not good investors. They sure can be. But if you take statistics, and the statistical history-wise, you have higher chances of failure on this side versus people who are prone to doing it regularly, who have experience in it, who are certified by FINRA, certified by SEC, et cetera, et cetera. So be careful which sponsor you choose. I always mention that any sponsor you choose, they must be able to show you their track record.
Oh, absolutely.
And if they cannot show you the track record and they say, oh, this is classified information, I can't show this to you, I would think twice. Because if somebody has done well, why would they have a problem sharing their success with you, right?
Yes.
So to me, that is very, very important. The second important part in investment, at least where I come from, is references.
Great point. It's a job interview and an investment interview.
Absolutely. Do not get caught into choosing an advisor just because he called you 5 times and waited out of your door for 6 hours.
Yes.
You need to do your due diligence where you invest.
I think the other thing, we spent a lot of time in the last few years with the pandemic speaking about the strength of the sponsor, and Ignite benefits from Encore Enterprises as our primary sponsor. And it's not only the track record, but how they manage the company's financial success, conservative balance sheets, so that in times of unpredictable markets or a COVID pandemic, for example, can that company sustain through market cycles, which is partly shown in a track record, but not to the extent that we've seen the last few years.
Yeah, I could not have emphasized any more than what you just did. It is such an important thing to understand that the company has weathered the storms.
That's right. And
I normally say that in real estate, if you take generally any cyclical business, the storms are usually every 7 to 10 years. And if you can weather it 2-3 times, that tells you that these people exactly understand how to navigate through tough times. Another important question comes most of the time, and we kind of talked a little bit about how not to try to catch up with other people's success by taking riskier investment. So what is a realistic growth time from you start investing to see I should now reassess where I am or how am I doing? So what are your thoughts on that?
I think you can look at this a couple ways. Generally speaking, I think you would hope to have a 10-year time horizon across multiple asset classes. That puts you in a pretty favorable position to sustain market cycles. But every different investment has different time horizons associated with it. So maybe it's 10 years for public market cyclicality. On real estate, maybe it's 3 to 7 years, depending on your asset type or the overall market conditions. But I think 5 to 10 is a good time to take a good hard look at your portfolio. But every year, I think for this, to build your confidence in what you're investing in, you at least want to look at your asset allocation once a year.
No, that's very true. I've always advised very similar to most people. The one caveat that is very important is you want to keep watching, but you don't want to keep jumping too often either.
Yes.
Because that will also put you in a very disadvantage because it takes time to learn industries. It takes time to learn your investments. So pick your horse right and then ride on it for a while. Give the horse a chance to succeed. If you keep changing the horses, you'll never understand any of the horses that you are riding. So it's very important that you have a proper time frame that you are going to give investment to work. And also 100% I tell you, almost 100% because we never can be 100% about anything. Nobody only has successes.
That's right.
People do have failures and failures keeps us human. So don't worry about failures. Use failure as a step for the next success. I always told people that I have made more mistakes than everybody watching on the show today. The only good part about making mistakes is that I have tried very, very hard not to repeat the same mistake again. And then the number of mistakes you make starts shrinking and narrowing, and then you make less and less mistakes. You were saying something?
Oh, I think I was just going to add to your horse analogy there. Maybe put some soft blinders on the horse so you're not distracted by all the noise. There's so much noise in the media, on the internet when you're trying to research. And I think to your point of give the horse time to get where it needs to go, well, don't let your horse get distracted by everything else that's going on and stay focused on what your goal was, what the goal of the investment was, and not trying to outsmart what everyone else is doing.
No, that's very true. So in summing this up, tell us a few takeaways and quick applications of what we discussed today so our viewers can say, okay, this is what I should be very careful about going forward.
Sure. So I think my biggest takeaway is just keep it simple. I think I led with that. Decide what your purpose is, what your investment goal is, and then outline some ways you can get there, whether that's dollar cost averaging, consistent investments, or you're already fully invested on your 401k, so you want to explore private markets. But just keep it simple. Don't make your life more complicated than it needs to be, and you'll still have a good outcome, typically.
No, that's a very good advice. The one advice that I've always given to people who have come to me is, if you do not have time to study companies, then do not try to pick a stock.
Yes.
Stock picking is not going to is no different than going to a casino and pulling that one-armed bandit.
That's right.
So be careful. If you are not going to spend time, understand the fundamentals, you do not understand how to read the financials, do not pick a stock. Just follow Warren Buffett's theory. As you know, I had the great fortune of meeting with Mr. Buffett one time, and I totally follow his theory that if something happened to him, he wanted his money to be put into S&P or NASDAQ and let his heritage work through that, but not pick a stock. And I constantly mention to people, do not try to pick a stock if that's not your profession. At that point, just get QQQs or SPYs and invest over there. This is the best advice I can give to prevent a lot of heartburn. And then if you want diversification, if you want to get into private equity or private market, like Asia just mentioned, then find a good sponsor like Ignite Investments. It's one of those. We don't say that's the only one. There are lots of them are better than them, or there are lots of them worse than them. But every dog has a day, and then people do well. So you look at an average, and we believe that Ignite Investment consistently performs and produces great returns. As far as I remember, we have never had a deal there where investors have lost their money, ever. I don't think, except one deal, we never had an investment that did not have a double-digit returns. So find a good sponsor, and then stick to that sponsor. Give that sponsor a chance. Invest all the products that the sponsor is offering. So again, you are diversifying. I think this will be a good takeaway from today's session that we have with you. And again, thank you everybody for listening today, for viewing us today. Please follow all our social media. We are at every place, and I'm sure Micah is going to put all the social media contacts on the screen when this is all over. Go to our website, www.bharatsangani.com, and you can see different videos, different ideas, different thoughts. And if you have any questions, you can join us. You can also be part of our mentorship program, which is being revamped, and a new method of mentorship is going to start very soon. And sign up for, which is called Life is a Business. And at the end, I'm looking forward to see you again next time. Asia, thank you very much for coming and enlightening us today.
Thank you so much. And thank you for everyone for being a part of that conversation.